Recently, I was asked by a client's son who had recently started working. And he was asking me this simple question: Uncle, should I be investing in the stock or stock market, or should I do mutual funds? Now that got me thinking. The last 2 years has seen a spectacular growth in stock market, especially after the pandemic induced crash into March of 2020. The markets, thanks to easy liquidity, have been going up and doing extraordinary stuff. And many investors, many thousands and millions of investors who have started stock market investing in the last 2 years have seen their portfolio do exceptionally well. They've come to believe that they have the Midas touch. Anything that they invest in seems to be going up. Is that the truth? So is stock market all about making easy money? Is that it? Or is there more to it than meets the eye? That's what we're going to talk today in our topic. Now, is stock market investing for you? Let me tell you that stock market investing is for you if you fulfill these 4 criteria. 1. Stock market investing is about understanding the particular stock that you're investing, the industry that it commands or works under, the challenges and the opportunities that exist in that industry, and deep diving into understanding everything that you know and you want to know about that company. So it involves a fair bit of exercise that one needs to do in terms of spending time, energy, and effort in understanding, grasping data before you make that investment. So building conviction is the first step and a very important prerequisite before you invest in stock. Second up, it's not just about one time investing and forgetting about it. You need to keep tabs of what's happening. At least once in few months, you must look at your portfolio, understand, go onto the net and read about that company and find out how that stock is performing, what's happening, what are the assumptions under which you invested, and those assumptions, do they stay true? Is one more thing you need to kind of understand. So there needs to be a discipline of going back to that stock, revisiting those assumptions under which you invested and finding out. Third, nothing happens quickly. It's all about the long term. You can be with a stock for 5 years and nothing may have happened to it. And in the 6th year, the stock may do a 5x rate. Right? So what you bought at 100 may remain 100 or 120 or 130 for 5 years. But between the 5th year and the 6th year, from 100 rupees or 130 rupees, it may move to 600 rupees. So it's really, do you have the patience to wait with that investment? So do you have a long-term orientation in that? Last but not the least, there is a certain amount of passion that you need and time you need. Are you a person who is passionate about this line and who is willing to invest time and energy? Extremely important. So if you fulfill these 4 criteria, then stock market investing is certainly for you. Absolutely. But on the contrary, who are mutual fund investors? Why should you invest in mutual funds instead of stocks? After all, mutual funds are also investing in the same stock through a fund manager. So why should you go to a mutual fund? Now again, there are 4 reasons I will give you why you need to go to a mutual fund. You're somebody who is very keen on investing, but you really don't have the time, energy, or the passion to really do that level of research to build your conviction in certain stocks. It's best is to buy a diversified mutual fund. You can keep investing a set of money on a regular basis, like a SIP on a monthly basis in that fund. You'll almost get very similar return to what you would get by participating directly in equity. And that too without putting in any effort, because there's a fund manager who's doing all the grunt work on your behalf. Second up, you are looking at it on the long term, but you don't have time every quarter to analyze stocks, understand why something is going up, going down, so on and so forth. You're just content to put away money. If that's your predicament, then mutual fund is certainly for you. Third, Certain amount of mutual funds also provide you a tax advantage when you invest in them. So if you want to get that 1,50,000 rupees of ATC benefit by investing in ELSS mutual fund, then mutual fund is certainly for you. Last but not the least, if the daily ups and downs of stock market do not either get you excited or get you dejected, then mutual funds is a perfect place, a very passive place to create long-term wealth for you. So if you fulfill these 4 factors, my friend, mutual funds is what you should stay. And between a mutual fund and a stock, is there a big difference? The answer to that is no. Is there a big difference in somebody driving a car and somebody driving a bike? Absolutely no. It's about keeping you to move from point A to point B. We have a vehicle. Now, driving your own car could be a very comfortable thing, but it's also something that you need to be aware of. You need to make sure that there's a traffic on the road. You need to maneuver it. A lot of tension. On the other hand, let's assume you have a metro near your house taking you to exactly the same place where you want to go. A metro is a brilliant way to get to point A to point B. You get into the metro, you sit, you open your magazine or book that you're reading, and for the next 40 minutes, with absolute calm, you can go and reach your destination. So just as a car and a metro, taking a choice between stocks and mutual funds are very, very similar. Pick your thing, stay consistent, stay disciplined. I'm sure you will reach your destination well on time.